Morning, everybody. It's the 22nd of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
How are you
Top
doing?
of the morning. Yeah, very well, thank you. And you?
Yeah, not bad, thanks. Not
Good
bad
win
at
last
all.
night
Very good win last night, yes, for the youngsters.
into the
They're all
into
pretty
the
young.
semi-finals. Yeah, exactly. Yeah.
Yeah, very good indeed. So let's get into it. First up, Boris has ruled out stricter pandemic rules before Christmas in the UK. His stock is obviously pretty low at the minute, so had he done anything contrary to that, I think he would have been even less popular than he already is. We've also had some news out this morning or overnight in the UK that the quarantine period for once you get infected has been dropped from 10 days to 7, which hopefully will save a few Christmases this year, which is good news. Um, UK businesses also welcomed the breathing space provided by a £1 billion government support package to help offset a collapse in sales as a result of the recent scare over Omicron. Elsewhere, the US President Joe Biden has said that the Omicron variant will result in more breakthrough infections among the vaccinated Americans, but it's unlikely that they'll be severely ill. Let's hope he is right. In terms of what's going on with regards to vaccines, the US Food and Drug Administration is said to be poised to authorize a pair of pills from Pfizer and Merck to treat COVID-19 as soon as this week. That's a milestone in the fight against the pandemic that will soon expand therapies for the ill. So that's good news. An announcement may come as early as today. The treatments in which patients take a series of pills at home over several days could ease the burden on stretched hospitals with infection poised to soar through the winter in the US. On the corporate side of things, Elon Musk sold another bundle of shares yesterday for $528 million, meaning that he's now more than three-quarters of the way to making good on his pledge to sell 10% of his stake in the electric car maker. He's been offloading stock since asking his Twitter followers in November what he should do. Well on the way to getting that done. So that's pretty much it on the news front. We can now get stuck into some charts. Steve, anything catching your eye, particularly over the last 24 hours or so?
Well, the stock market rally definitely caught my eye and caught me out, but we'll go on to that, come on to that in a minute. I'm looking at the energy side of things really this morning. I've done a video, it'll be on YouTube shortly, so we can sort of dive into that. But yeah, so long short of it, impulsive move higher that we all know about from the pandemic. Impulsive move higher. We're in a corrective phase. We seem to have found support in this band of support that have drawn on the charts between 61.50, 66.50. We had a decent sell-off at the start of this week. Obviously, over the weekend, we had the equity markets down, oil followed, and found a base around about $66.10, reacted hard from there, forming a bullish hammer, and we filled that gap that was there. There was a daily gap there that's been filled. The weekly gap's been filled, obviously, as well. And the price action projected really nicely, strongly high yesterday, in line with the indices markets as well. So nothing really happening this morning. We've got all inventories out later, so be aware of that. That should add some volatility and spice to it. Really need to see how prices react around about the $73 level. That's where resistance comes in this morning. On the downside, probably $69 should prove supportive enough to keep this WTI rally going. Similar sort of price action on Brent crude oil. Nothing really any different there, apart from obviously the price. Resistance here 76.50 and support below, probably coming in around about the yesterday's open 71.65. Natural gas still has this really odd looking gap on the daily chart. That's never going to go away, obviously, but on the weekly chart, the gap has been filled. We really need to recapture ground above the $4 level to sort of stave off this negativity that we're seeing in natural gas. Otherwise, this pressure could build and we could see prices projecting lower once 358 is broken on the downside. We have had a crossover on the MACD, so the last sort of 3 days have reacted nicely higher, in line with the markets and crude oil, but there's still a long way to go to save natural gas, which is really under pressure. Gold, this was a little bit of a cheery note for me yesterday. Managed to bag a winner on gold, went short of it, really based on this daily candle, this shooting star type formation, and really breaking down below the 1790 support level, 92 support level, looking really, I think, to target and move further down to make towards 1760 maybe by the end of the week. Who knows? It could happen as soon as that. We have got a, let me just show you what my charts are looking like on gold. We've still got this, this is the long-term chart. This is the bearish channel that we're in, still potential for a retest of the 1678, even as low as 1645 with this upward trending support line could be dominant. We've had this double bottom formation, a break of the neckline at 1915 would open up that move higher, projected higher to around about, well, is that the actual, yeah, let's get a measured move target on this. That would project a move to around about $2,143. Obviously not going to happen anytime soon, but really sort of like focusing maybe on next year or the year after as a move. Yeah, so, and obviously the bullish flag has got a projected move up towards 2,600. So I'm still focusing on this formation, especially while this support at 1677 holds in. Take a look at cryptos, a little bit of a pullback on crypto market. I had a chat with Joe offline yesterday, and all the crypto followers and adorers and worshippers out there are really going to not like me. I think crypto's had its day. I think we're building up to, from a technical perspective, looking like quite, excuse me, someone's poisoned me because I've said crypto's had its day. We've seen this this negative formation building. There's still a long way to go to see a break of this neckline. We can see a head and shoulders formation here. We can see a potential head and shoulders formation here. I don't know if there's a little thing I can use to draw. I don't know if it draw. No, it doesn't draw like that. I'll show you the formation as it should be. So we've got this one here. That one. That's a potential one. We've also got this shorter term one here. This is could be a bit cleaner. Let's drag that down to there. So yeah, really sort of, if we get a break over the 42,000 level, this opens up the downside. We've got 28,800 to 32,000 support, which is long-term support, with this band of resistance up between 60 and 69,000. Should be capping gains, as far as I'm concerned. Yeah, I just think the sort of like really looking into Bitcoin, reading a bit more about it. There's a lot of newer kids on the block that are far more efficient in terms of mining. And as we sort of turn into this really green world in order to try and save the planet, I think more focus will be on the more efficient cryptocurrencies out there. Don't know which one it'll be. So you know, maybe I'll sort of dive a bit deeper and try to find one of the ones that can replace Bitcoin. I think Bitcoin's just held up on hot air, really. So let's go into the indices. I'm not making too many friends, obviously, with these comments this morning, but I don't really care. Let me go on to the daily chart. Daily chart in FTSE, obviously nice recovery yesterday. We're having a bit of a pullback this morning. I think this might be a buying opportunity. Obviously my shorts in indices were stopped out and I'm actually long now. So talking my book a little bit, but I seem to be able to sort of like, you seem to be able to recapture alpha quite quickly once you do get on the this sort of like upside of the trend. So 50-day moving average proved supportive. That comes in at 71.77 in FTSE. Really need to sort of test water above 73.17, and then we'll have some sort of potential resistance coming in here around about the 73.60 level. So as I say, a little bit of pressure on things this morning. We can see on the hourly chart on FTSE this sell off here, but it seems to have stalled and starting to correct higher. Also here with the with the DAX, we saw a move down to 50,423, support found there, and a little bit with the Ichimoku cloud lines, and looks like it's posted a bullish hammer really now. That candle will form in the next minute. So looks quite positive on the DAX side of things. Looks like we're forming a bit of an impulsive move higher. Really need to sort of break above 15,525 to open up the upside. And yeah, plenty of, we've got a nice little trend line from this swing high coming in here, looking at 15,668 for there, and obviously we'll have a maybe a closer, no, not quite. So two nice potential trend lines coming in and forming resistance around about 15,670 area today. So that's something to watch out for maybe if we do get a push higher. The Dow obviously reacted really nicely higher and is holding, stalled around about 35,550, which, as you can see, if you look back, is quite a decent, got this big thick red line, which proves to be quite pivotal on price action, holding support, bang up, breaking down through, breaking up through, coming back, retesting support between 35,445 and 35,513, and then, as we say, if we do get another break higher, potentially looking to build towards 36,150. So looks quite nice on the looks quite constructive on the Dow side of things. Nasdaq also nice little reversal. Stalled at the Ichimoku cloud on the 4-hour chart, and looking to once we break the resistance there around about 16,000, should open up the upside and look to target 16,460. S&P's similar. The breakdown didn't last and we're projecting higher. Resistance coming in at 46.52, and obviously the all-time highs not far away, up at that 47.50 area, 47.52 I think it is. Yeah, that's it from me, Joe.
Thanks, Steve. Thank you. I'm going to take a quick look at the FX markets then, starting not with NASDAQ. So I was just actually planning for these 2022 predictions, Steve. So maybe I'll just go with that actually. Just focus on these three markets, just to, I guess, put some markers down as to where we think price could go on a few of these major markets that we cover. So this is the dollar index first up. So I've sort of segmented it into previous years, as you can see. So look at the previous year, or 2021, still in it, of course. It's been a pretty good year. We've seen things bottom out, form a double bottom on the dollar index, break to the upside, and now we're heading towards this first target that we've got up here at 97.70-ish, which is a 61.8% fib retracement of this entire down move. So for me, a really sort of nice level to be targeting. I think that may trigger a bit of selling potentially as we see prices consolidate. I mean, ultimately, I think we are going to continue moving higher on the dollar index, but as you can see, the recent move higher in recent months has been pretty steep, and there hasn't really been much of a correction that's taken shape. So maybe we could get a prompt in some profit taking here, but ultimately I do think we're going to get up to this 100 level in the dollar index over the course of 2022, and by seeing bullish price action in the dollar index, I guess that means we're going to see less appetite for maybe riskier assets in that time as well. So maybe we could see an underperformance in the likes of equity markets, given that things have been pretty good on that front as well for a number of months. So that's my kind of overall view for dollar index, looking for upside towards 100, and I think downside should be capped around sort of 93.43. So from a risk reward perspective on that basis, buying into the dollar index with limited upside in the short term, maybe. Yeah, that's my overall view on that, I think. Let's take a look at Euro US dollar. Again, not been a great year. The flip side of what we've just seen on the dollar index, it's heading down towards key support of 114.47. I think we're going to see a continuation lower ultimately because we are going to see dollar strength. In terms of any upside, I think that could be capped to maybe 114.95, this big sort of resistance level that I've got drawn on the chart here in black. So that's kind of where I think we could see any correction take shape to on Euro US dollar, and we've got a couple of support zones down here at 111.47. Then we've got 78.6% fib level at 1.1002. So I think we could see price action down to this kind of zone throughout 2022, just really a continuation of weakness in Euro US dollar. Of course, everything that I'm showing here is pretty much contingent on what the dollar does. And if the dollar does continue to trade in bullish fashion and go up towards that 100 level, then that's obviously going to be help these other ideas work out, euro dollar and cable, which I'm also going to take a look at. That's been trading in a corrective channel for a number of months now, pretty much most of the year, having had a very strong move to the upside following the fallout of the pandemic in early 2020. Really steep move higher. We've corrected now down towards the 38.2% fib level here. But while we're trading in this bearish channel, there's, I think, still scope for further downside. We may see a correction to the upside to test the upper end of this bearish channel. But ultimately, if I'm believing there's going to be stronger US dollars, then I think we're going to see lower prices in cable. So I'm actually looking for the next fib level down, which is the 50% fib level on my charts, which comes in at 128.30. So a little bit premature, I suppose, on rounding things up for where we believe things could go next year. But we're only here till Friday, aren't we, Steve? Then we're going to take a week off and be back in the new year. So
Yeah.
not a bad place to sort of take stock of things and make some predictions for next year. I don't imagine between now and Friday that we're going to see any sort of huge swings in the sort of intraday or daily price action on the charts. So hopefully that was useful. Okay, gun to the head trades from yesterday. As Steve mentioned, he had a nice winner on gold. I unfortunately was stopped on Bitcoin for a 1 hour loss. And Steve, you made 1.8R on gold, so congratulations.
Yeah, feels good.
Nice one.
Mm.
What are you fancying today?
I'm going to go with DAX today. I see Tibor as I'm logging DAX anyway. I see Tibor has triggered his long on the intraday trade idea, and obviously he's pretty successful. Stop. My stop on my own trade is 15,375. So I'm going to stick to. Oh, that's nearly 700. I'm going to stick to there. I have to move my stop, obviously. 700 points from here. And I want to try and get some 3-to-1 out, and that comes in around about where the ATR levels bands are. So I'm really happy with this one. 3-to-1 risk reward, getting long here. Stop at 15,374.5, targeting 15,654.5. Yeah, I'm happy with that one.
Good. Best of luck. Sadly, I'm going to go the opposite direction to you and sell the Nasdaq. We've got the index trading in this range. We pretty much called it spot on the short that we did on this last week, and it sort of played out all the way down to the lower end of this range, which was really nice indeed. Looking at in a more shorter term time frame, if we take a fib retracement drawing from the highs here that we posted down to these lows, we've actually got a 50% line here at 15,979, which you can see prices stored into. And also, if we take a look at the 10-period exponential moving average, which I often like to use as a trigger for a switch in momentum, we've actually seen a close below that level, taking out some of these lows here as well. So I'm going to predict lower prices on this today, selling at 15,918, stop loss at 16,018, targeting a move back to these lows down here at 15,542. So looking for 3.75 R on Nasdaq today. It doesn't feel great given that it's this time of year and typically equity markets do grind higher. But strange things have happened, I suppose.
Yeah.
Okay, data-wise, we could get a bit of a push from a variety of data points today. We've already had UK GDP out earlier this morning. At 1:30 today, we've got US GDP. That is expected to remain at 5.9% year on year and 2.1% quarter on quarter. We've also got the Chicago Fed index numbers. That is expected to fall to 0.5%. They're both out at 1:30 UK time. Then at 3 p.m. UK time, we've got the US existing home sales number and also the consumer confidence number. Sales forecast to fall to 2.7% month on month, and confidence expected to rise to 112. Then at 3:30, we've got the US EIA crude inventory oil numbers. Stockpiles fell by 4.8 million barrels in the previous week. So lots going on today on the calendar. So maybe that could provide a bit of fuel to our trade ideas.
Yeah, hopefully. I just looked at a different view on your Nasdaq on the short-term chart, thinking about this inverse head and shoulders here, which looks to form,
Nice.
and the British flag. So
Yep.
definitely, it feels a bit like a flip of a coin Wednesday. So let's see who wins. Do the stock bulls or the stock bears wins? Let's see.
Yep. Nice spot there, Steve. Okay, cool. That's pretty much it from us today. We will be back tomorrow morning, and then finally on Friday to wrap up the week before Christmas. So yeah, see you all tomorrow.
Cheers.
Bye bye.